Hi everyone, welcome back to the US CPA classes for financial accounting and reporting. In this particular video, which is part 3 of trade receivable, we'll be covering in detail about uncollectible accounts. That is your doubtful debts or bad debts. So let's dive into to understand more in detail about uncollectible account, which include doubtful or bad debts.
Right. So next topic is uncollectible accounts. And then we have contra allowance for uncollectible. Here we have factoring, which we discussed earlier. Possible, probable treatment. And then we have notice. Okay. Maybe what we can do, we can finish this concept of uncollectible accounts, doubtful debt and bad debts today, and remaining will continue in next class. But I'll send you the notes right away so that you can take a look. So next class would be easy for you. So estimation approach. So there are income approach or balance sheet approach for estimating the provision for doubtful debt, right? So how do you estimate the provision for doubtful debt? There are a couple of ways. One is, like percentage of credit sales. You can say like I do expect 1% of my credit sales are generally not recoverable, right? So in that case of scenario, will be when you are calculating the provision for doubtful debt. So you just apply that percentage on the credit sales, and that percentage is being derived from your historical trend or your estimation, or based on, you can say, the industry practice also. Second way of calculating the provision for doubtful debt is a balance sheet approach. Balance sheet approach, like how much account receivable is outstanding at the balance sheet date. So you can consider maybe certain percentage of that. Maybe generally 2% or 3% depend on industry and consumer market, you can say, segment. Accordingly, you need to identify the percentage. So that is generally based on the historical trend, industry practice, all those things you need to keep in mind. Third way could be like aging analysis. When the company do have a policy that they should collect anything and everything within 1 year. So any amount is being receivable after 1 year is a provision for doubtful debt. Right? Any doubt here? Income approach or balance sheet approach, which we need to follow?
No, sir.
No,
Right?
sir.
Second is method of accounting. Direct write-off method is not US GAAP, or allowance method is as per GAAP. What is allowance method? You need to create a contra asset, use the current expected credit loss model, which we have studied in ASC 326. Third is passing the journal entry at the time of creation of provision, either based on income approach or balance sheet approach. You need to make a journal entry called provision for doubtful debt account debit to account receivable, right? So here you will be booking the provision for the account receivable upfront. At the time of actual write-off of the balance sheet, bad debts account debit to provision for doubtful debt. That is the journal entry you'll be making it. Or what is direct write-off? Have you heard this term before? Direct write-off. When you are not creating provision, rather you are directly expensing it off. Right? So allowance for tax purpose, because tax purpose, provision for doubtful debt is not allowed, whereas actual bad debt expense is being allowed. So when you are making the tax books of accounts, then you'll go for a actual write-off method, right? and no journal entry until the written off is being made. Account receivable balance is generally overstated as no allowance for or provision for doubtful debt is being created. So here, like the account receivable are generally overstated because you have not booked anything as a provision for doubtful debt. Right? Third is journal entry for bad debt expense will be bad debt expense account debit to account receivable directly. There is no movement to the provision account. Make sense?
Yes, sir.
Let's do an illustration. On December 15, year 3, X company recorded credit sale of $10,000. On July 1, year 4, the company determined that account receivable was uncollected. Prepare the required journal entry. So solution for this is in year 3, no estimated bad debt expense or allowance are recorded. Violate the matching principle not as per GAAP. So in year 4, the journal entry to record the account receivable of 310,000. How this 310,000 has came? Sorry, my bad. Journal entry is recorded the account receivable of $10,000, not 310,000, $10,000 as uncollectible. So then bad debt expense account debit to account receivable directly you will be making the write-off. Revenue recorded in year 3 is not properly matched to the bad debt expense recorded in year 4 because the matching concept where you have respective receivable for the respective provision you need to create. But if you create all the provision for doubtful debt on actually not receiving the cash, then you are not following the accrual basis of account. That's a fundamental difference, right? Any doubt here?
No, sir.
Next illustration is the percentage of discount, percentage of account receivable. That is your balance sheet approach. Robert company use percentage of uncollectible based on year-end balances in the account receivable. Company estimate that the balance in account receivable must be 2% of year and account receivable of 80,000. The balance in account receivable account is 1,000 credit before the adjustment. That means opening balance you have is a $1,000 credit. Prepare the journal entry to record the adjustment to allowance for account. Gross receivable you have $80,000. Allowance for doubtful debt is saying 2%, right? That is given in the question. 2%
Yes.
of the year-end receivable, which is 1,600.
Correct.
Right? So your net receivable is 78,400. Other information are irrelevant. So there in the question, you'll see a lot of irrelevant information as a distractor information for you. So you need to keep in mind what information is relevant for the specific question. That information may be relevant for some other example, some other question, but you need to look at the context of your question. Make sense?
Yes, sir.
Okay, last question of the day. Rollers company had an ending balance in allowance for uncollectible account of $30,000 at the year end, at the end of the year 1. During year 2, Roller rots of 40,000 of account receivable. At the end of year 2, Roller had $30,000 in account receivable and determined that 8% of these would be uncollectible. What amount should be reported as uncollectible accounts expense on Roller year 2 income statement? Right? So what is the call of the question? What amount should be reported as uncollectible account expense? Right? Not provision, expense on Roller year 2 income statement. So first line is Roller had an ending balance in allowance for uncollectible $30,000. That means they are creating a provision account, and the closing balance of the provision is 30,000 at the end of the year one. That means it is your opening balance $30,000. During the year two, roller write of $40,000. Shall we make an account receivable account? So you have opening balance. How much? Are you guys with me? 30,000,
Sir.
Yes, sir.
right? And then you have write off,
Less 40,000.
or you can see here also minus 40,000. At the
10,000.
end of the 2 year, roller had 300,000 in account receivable, right? Your closing
24,000.
closing balance is how much? 300.
Huh?
$300,000, and determine that 8% of these would be uncollectible. What is the provision?
Sir, 300,000 तो AR का balance है.
हम ये प्रोविजन का कर रहे हैं ना.
So we are identifying the provision plus into 0.08, right? So this is your
Right.
provision, right? So what amount should be reported in uncollectible account expense? What will go into the expense?
24,000 plus 10,000, 34,000.
What is 10,000?
सर जो एक्स्ट्रा राइट ऑफ हुआ है हम वी हैड प्रोविजन ऑफ 30,000 ओनली एंड वी रोट ऑफ 40,000. सो जो 10,000 है वो पीएनएल में एक्सपेंस शो होगा प्लस 24,000 का जो हम एडिशनल प्रोविजन बना रहे हैं दैट वुड आल्सो गो टू पीएनएल तो 34,000.
Sorry, I didn't got your point. You have opening balance, we write off 40,000 out of this opening balance. So you have 10,000 extra provision.
सर ये राइट ऑफ जो कर रहे हैं ना ये बोल रहा है कि आइडियली मतलब प्रोविजन होना चाहिए था 40 का,
Yes.
बट हमने
Yes.
40 नहीं बनाया,
Yes.
30 हमारे
Yes.
ओपनिंग थे.
So this, yeah. So provision for doubtful debt account cannot go negative. That means there is an assumption that this 10,000 would be extra provision created during the year in addition to 24,000,
Right. Yes, sir.
right? So that's how it 34,000 will come. Right?
Right, sir.
Any doubts so far?
No, sir. No. None.
Okay, so I think we are very close to it. Maybe like in next class we'll finish off this small one, and then we will continue with PP&E also. So in next class we'll do this and property, plant and equipment.
Okay, sir. None.
Cool.
Oh.
Okay, enjoy rest of your Sunday, and we'll catch up on Saturday, same time, 10 to 2.
Okay, sir.
Okay,
Okay.
sir.
Bye.
Bye, sir.